Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again at Ausbiz. Let's check what happened overnight. Global markets mostly in the red. Well, the US dollar and Treasury yields fell and gold hit another record. On Wall Street, the main indices ended lower in choppy trading amid investor caution ahead of an anticipated interest rate cut from the Fed. The CBOE Volatility Index climbing to its highest level in more than a week. Nvidia shares fell after Reuters reported weak demand in China for its new AI chip. Shares in Dutch semiconductor semiconductor companies, I should say, moved higher after CoreWeave announced a $6.3 billion order with AI chip designer Nvidia. Oracle rose after President Trump said the US and China have a deal that will keep the short video TikTok app operating in the US, with reports that Oracle is part of the investor consortium. Webtoon Entertainment soared 39% after a deal with Disney to create a new digital comics platform to feature content from Disney's portfolio, including Marvel and Star Wars franchises. And Warner Brothers Discovery stock fell on a broker assessment that there is a reasonably high probability of a bid for the company, with Comcast facing potentially higher regulatory hurdles than Paramount Skydance and Sony likely deterred by the required capital commitment. Well, US retail sales increased a more than forecast 0.6% in August. However, momentum is expected to ease amid a labour market weakness and rising goods prices because of tariffs on imports. Import prices rose 0.3%, with export prices rising the same amount, and US industrial production rose 0.1% last month. Well, the Fed is expected to cut its benchmark interest rate by 0.25 percentage point to the 4 to 4.25% range at the end of its monetary policy meeting tonight. Meanwhile, Stephen Moran has been sworn into the Fed position after the US Senate narrowly confirmed him to the central bank's board of governors ahead of its policy meeting. And the US appeals court separately declined to let President Trump fire Fed Governor Lisa Cook. Well, US Treasury yield slipped, with the yield on the 10-year note at 4.02%, the 2-year falling to 3.5%, and the US dollar index down more than 0.5% on the day to be at a 3-month low, the Aussie climbing to 66.9 US cents, and Bitcoin advancing to just shy of 117,000 US dollars. Oil prices have risen as traders consider the possibility that Russian supplies may be disrupted by Ukrainian drone attacks on its ports and refineries, while also awaiting the Fed's decision on interest rates. Brent crude futures up 1.5% at $68 a barrel. Copper was off 0.5%, iron ore rose more than 0.5%, $106 a tonne, and gold eclipsing $3,700 an ounce for the first time, on bets of a rate cut by the Fed prompting safe haven demand and central bank buying. Spot gold just coming off a little since then. Well, let's focus now what's going on Wall Street. Howard Silverblatt joining us from S&P Dow Jones Indices. Howard, welcome back. Good to catch up with you. So, of course, investor focus on the Fed decision. So, as I mentioned there, perhaps a little caution ahead of that decision.
There's some concern. Obviously, the street overwhelmingly, as you saw and demonstrated on the chart there, is looking for the 0.25 point, and basically most of the street for the 0.25 point in October and then in December. The question is two questions here. One, what is the vote? Okay, who's going for 50? Feasibly could Milan go for 75? the way Trump has been speaking about it. So the actual vote, who dissents, how much they want, is important. The dot plots are the other important item. How many cuts do you see this year? Do you agree with the street, or does the street agree with you that there'll be 3, including tomorrow, and how many for next year? And the unemployment level. Employment is what's helping the economy. So once people have jobs, they're spending, and they're spending nicely. Lower rates will even help that. So where's the employment prediction on the dot matrix, as well as the inflation? So those are the items that they're going to be looking for tomorrow at 2 when we get the release, and then 2:30 New York time, of course, when Powell speaks. But again, anything outside that 25 basis point cut is going to get a big reaction. If you put money down on that 50, you're going to get a nice return. And if we do not get a cut, you're going to see the market go south.
What's your bet, Howard? I mean, certainly I think we can rule out no move. So 25, 50, you say even possibly 75, given those
maybe for Stephen Moran, could he do the 50 or the 75? Again, he's temporary there, but and he is there. Trump appointed him, and he's there until January. We don't know who the permanent member is going to be there, but he's spoken very openly about 50, and Trump's spoken about 75. He's got a limited time scope on that board, so you don't know where he goes on that. Cook also, in all likelihood, will go for the 25. She typically does vote with Powell, but she's dissented before and wanted to keep it unchanged. So again, that vote out of the 12, what it's going to be is going to be an important item, along with the dot plots.
And in terms of Jerome Powell's commentary and justification for cutting, do you think he's going to be focused on what we're seeing in the jobs sector? Because as you point out, perhaps the market now a little more sensitive to what's going on there.
Yes, the jobs, the jolts, the jobs, the weekly claims, the monthly numbers, they're all now priority, and it's now a priority with the Fed. They are leaning towards that. He's commented towards that. He made stronger commentaries at Jackson Hole in August. So we're expecting him to talk about what he's seeing, where they're seeing it, but again, more importantly, what are your projections? They were about 4.5% for the end of 2025 and 2026 at the last June dot matrix that was released. So has that gone up? Do you obviously see that as more of a serious situation? A lot of economists on the street are looking for the 4.6, 4.7 by the end of the year. No one's going up to that 5% number, which would definitely create a different kind of scenario and a problem. But I think he will gear in on unemployment, but again say that they're keeping an eye on inflation, and that's one of the reasons that we see 25%. No reason to jump the gun and go extra until you get some more data in there.
Howard, let's return to what we're seeing on the equity market then at the moment, continuing to break records there. But is it that narrow leadership we're still seeing there in relation to those mega cap tech stocks?
We are. Volume is a little over 80% positive, so the issues are gaining. I mean, you can use a dartboard. Your stock is going up. The problem is, if you look like since the April 8th low, okay, the average issue is up a little over 5%. The Magnificent Seven, their average is over 60%. I mean, Tesla's up 90%. The worst in the Magnificent Seven is Amazon, up 37%. So again, they're all moving up, which is good. You're getting positive breath, but nowhere near the magnitude or the impact of the Magnificent Seven. And that's one of the reasons that a lot of people on the street are doing side bets, even if you're going into indices or something, which are heavily into the seven. They're doing side bets on the Magnificent Seven on there. Again, the momentum is there. They control a lot of the buybacks. We'll do a buyback report tomorrow, and they were over 30% of all buybacks, so about 28% of the capital expenditures by themselves. So these are major issues on there. So again, the breadth is good, it's positive, everything's going up, but nowhere near the magnitude of the Magnificent Seven.
Well, I mean, the market is priced to perfection. What are you seeing as far as forward earnings are concerned? What's the expectation?
Very positive. It's hard to find some negatives on there, regardless of what. You've got a couple of items that are pushing it up. First of all, the consumer, as you had on the retail numbers, the consumer is spending. They're employed. 4.3 goes up to 4.4, 4.5. It's still a nice employment number. Therefore, people have the money and they're spending. Also, companies themselves are getting a big tax break from the One Big Beautiful Bill, $190 billion this year. Okay, individuals get about 150 in February, March, and April when they do their taxes, but we've already seen companies on the September 15th, when with their quarterly estimate taxes were in, put in less money to the government. So they are reducing their taxes. The earnings are going up. We're looking for the second half year over year to be about 13.6% gain. I mean, that is helping. Are the PEs high? Yes. Are they still going to be high even with 13%? Yes. But they are helping to support the market and the multiple. So the earnings are good. Yes. Second quarter's setting a record. Third and fourth are expected to do a record. But again, we are paying highly for that. You know, in the mid-20s, depending upon the stocks you're going in. If you're going into some of those growth stocks, 30 and 40. But at least there's earnings. It's not like Y2K when the technology had no earnings and you were paying for it.
And Howard, I see that President Trump is weighing into the quarterly requirements for reporting. Look, I guess a lot of sympathy there, certainly in terms of how onerous it is for corporates. What's the likelihood, perhaps, that there will be a change to biannual reporting?
He tried it the first time he was president, and it didn't go through, but he controls a lot more, especially on the SEC, and it has to be the SEC who does it. The probability, I mean, if he gets his way, it would be a voluntary situation. We feel that most companies in the U.S. would continue quarterly reporting. But there is a difficulty on the quarterly reporting. It is very expensive. The CEOs, the company all have to go through this whole thing every quarter. It's difficult, but again, this might be an editorial on my side and a lot of people on the street. The quarterly definitely makes the U.S. more transparent. It gives you more information. You do have semi-annual, for example, in Japan, as well as Europe, where it's voluntary on there. But within the U.S., we see that most companies, if they've got the choice, are going to stick with going quarterly. More transparency. It is painful and expensive. Will Trump get it through? I wouldn't want to bet against him. I mean, if you would have asked me 6 months ago, I would have said no. But he's been able to push a lot of things through. And again, it is an SEC decision, and he does have a bit of influence there.
Howard, always great to catch up. Thanks for joining us on S&P Global Indices.
You take care.
Let's return to how we're likely to open locally on this Wednesday. As you can see, we're off almost 0.5% according to SPI futures. We'll get right across that in just a minute or two.